be a little bit cautious here chasing the markets. If you've got some cash, just kind of sit on it and wait right now as we kind of get some of these earnings that are good, but not quite as good as analysts had expected. We could see a pickup here in volatility. But here's what you need to know before the bell this morning. Of course, yesterday, earnings announcements came in from Microsoft, from Google, from AMD, lots of other companies. UPS yesterday, missing earnings estimates, really kind of a pretty dismal outlook, suggesting the economy is a lot weaker than expected. But S&P has been hovering up near all-time highs at this point. Again, very overbought, very deviated from long-term means. And so again, we're probably going to see some type of correction in the month of February. Would not be surprising at all. See some type of pullback towards 4780, potentially even as low as 4700 on the S&P for some type of corrective action. Would not be surprising. Now that'll give you a much better entry point to add some exposure to portfolios. We're still on a buy signal currently, but very, very overbought. So, as we've been talking about for a while, be a little bit cautious here chasing the markets. If you've got some cash, just kind of sit on it and wait right now as we kind of get some of these earnings that are good, but not quite as good as analysts had expected. We could see a pickup here in volatility. But again, we have to remember that these companies are beating estimates. But those estimates were lowered a lot going into this quarter. So again, we're beating a much lowered bar for estimates. But this morning, futures are pointing lower, particularly on the NASDAQ because of AMD, Google, and Microsoft. But that is also going to apply to the S&P because those are the same top stocks in both indexes. So we're going to see weakness in both the S&P and the NASDAQ today. The Dow's going to do a little bit better today, again, because we're seeing this kind of continued rotation. When you have a NASDAQ day where Microsoft, Apple, Google, etc. are doing well, we see really kind of a lag in all the other sectors of the markets. And on days that they don't do well, we see a real pickup in those stocks that tend to be more of a safe haven, kind of traditional plays, dividend yield, safety, security. So we'll see those stocks perform a little bit better today. So we're going to pick up this kind of this dichotomy in the markets between the Dow and the NASDAQ day, safety versus risk. And so we're going to see kind of a rotation off today into the safety zone. Now, the other side of this to be looking at this morning, of course, is watching what's happening with yields. Two things are going to happen today. First of all, we're going to get an announcement from the Treasury about their duration mix of what bonds they're going to be buying. We just saw the Treasury report talking about they need to issue a little bit less debt than was expected. Yields kind of popped up on that. Bond prices kind of moved up on that announcement. In fact, let's just take a look at bond price rather than yield. Yields were dropping. Bond prices turned up on the announcement that the Fed was going to the Treasury would have to issue less debt than expected. Today, we'll see that actual duration mix come in, which is also expected to be bond positive. So we could see TLT continue to move up, bond prices move up today. Of course, if the Fed does come out on a much more dovish kind of language late this afternoon, that would also be bond positive, and we're about to trigger a buy signal on bonds. So we've talked about how we took some profits in bonds a couple of months ago. I've been waiting for this correction to kind of work its process to work off some of that overbought condition in bond prices. We've now gotten through that. We're about to trigger a buy signal on bonds. So today's action could actually push that back into positive territory on the bond side, move bonds back up above that 200-day moving average, which would be very positive here. After this correction, worked off some of that overbought condition, now moving back into a much more positive structure for bonds and yields at this point. That's what you need to know before the bell this morning.